Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go over real estate prices from another person's perspective. This guy's basically me. We go through some other stuff as well lower in here. I also go over shipping in this one. So it's looking, I've got two different people, two different things, more real estate driven, more shipping driven on the last half. So here we go. Let's dive in. We've got the Happy Hawaiian. This is off Twitter. It says the average active home listings and the annual home price gain 1.3, 1.3, 1.3, 6, 4.5, and 3.6 price gains. The active inventory declined to 0.9, 0.5 to 0.4, 10.4%, 19%, 20.2% as inventories decline. That's what the annualized rate would be for 2022. My guess was somewhere between 10 and 20% for 2022. That's where I'm sticking, but we'll see where the year ends. He puts and poses the question, how much supply is needed to get a decline? We're talking many, many millions of homes is needed for that to happen. Because we have to reverse these active home listings, the inventory. We have to reverse this and go way higher. I just don't see how that's going to happen in the short term. Even if supply recovers in a big way, despite all of the issues we're having with supply chains and labor, maybe we get back to levels from the past few years when home prices were still going up 5, 6%. Just really feels like it would take a lot for home prices to crash. This is the active listings 2020, 2021, and then 2022. Complete decimation of active listings over time. We've got 7.6 million homeowners participated in these programs, and a huge percentage just converted to 40-year loans with lower payments, and basically had 6 to 12 months of payments wiped out via 40 years of future inflation before they have to pay. This is bullish home prices, and this was dealing with the programs like the forbearance programs. It's all bullish, guys. The guys who think it's going to be bearish, yeah, I agree with Happy Hawaiian. It's probably going to be bullish. They're going to refinance to 40-year loans. It's all going to be inflated away, just like I'm doing with my house. 30-year fixed rate loan, 2.75%. Let them inflate it away. The government's protected current homeowners at the expense of first-time buyers. Government programs can have very beneficial impacts on one group of people, but it typically means another group is being hurt by the same program. Totally agree. Average down payment still in the 7% range for the first-time buyers. Doesn't sound like much, but in 06 we got to the 3% range. Larger down payments, higher credit scores, and fixed rather than variable rates, plus no supply, plus rates about to come down, plus more inflation equals no housing crash. Here's your typical down payment among home buyers from 89 to 2021. The repeat buyers are up here. First-time buyers a little less. It's still in an acceptable range compared to history. As we get yield curve control from the Fed once they reverse their fake hawkish stance, tips will be bid and we'll have persistent and increasingly negative real rates, powering precious metals higher. Completely agree with that. If there was something greater than 1,000%, I would agree with it more than that. I guess 1,000,000%, billion%, I don't know. These bearish rising wedges rarely go to the apex. He's talking about this guy here. This is the rising apex there. It says these bearish rising wedges rarely go to the apex, preferring to break down a bit before. This one culminated in 2030. So my call for a top in the metals is Q1 2028. That's basically where I have it, is about, late 2020s. That's my current best estimate. Would align well with the time LTPZ would top out and break down also. All I own are inflation and commodity plays. The closest thing to a boring traditional asset I own has recently added fairly large position to LTPZ. Long-term something, I can't remember. I think long-term rates are about bottomed, and I think inflation stays persistently high. Expectations eventually will catch up. Coming up top, more Happy Hawaiian. Much like the GFC in 2008, Housing stocks peaked about 12 to 18 months before the collapse of home prices. You can see that dollar Z in red peaked last year in April 2021. There is now a wide gap that needs to be filled here, which means home prices in blue are coming way down. GLD SLV. This is what this person thinks. Edward Goffsky. Housing crash. I don't think so. I wanted to share that just because you had that one shared. For long-term real estate investment, I'd say pick somewhere not in the current drought zone. Do we really expect this to improve long-term? Bias to low taxes, bias to warmer, bias to naturally beautiful topography that would attract eco-tech worker types who can live anywhere. I live in this little area over here somewhere. Scroll on down. Prices could crash to resolve this, sure, but there are two other paths. Either rates come down or inflation continues to be high. Lower rates and or higher inflation is what I continue to bet on, rather than a nominal price crash. I agree. LTPZ long duration tips supposedly reflect of the market's expectations for long-term inflation. It's got support around the $72 area in this bearish rising wedge that culminates at the end of the decade. Aligns perfectly with my view inflation plays peak in about 6 or 7 years. I would agree with that. I would agree. Because it's about 5 to 10 years, 6 or 7 puts us right at that perfect spot. Looking at some other stuff over here. The rotation into real assets continue 15 weeks in, year to date. ARK getting killed, Ethereum, TLT, QQQ, Bitcoin, and SPY all down. Platinum, gold, silver, oil, and uranium killing it. All up. It says after that, they have it very slow trending to 4.9% by 2051. Imagine if the Fed actually has to pull a Volcker and get short-term rates above the rate of inflation up to 8% plus. This thing would absolutely blow out. That's why it won't happen. They will do yield curve control. So he's betting that rates they'll have to do yield curve control at a certain spot and stop rates at some sort of low interest rate number. This guy's all things ventured. I got a bunch of stuff from him. He's talking about shipping. He says, I'm going to pound the table a bit more about the show that shipbuilding capacity is insufficient to replace scrapping, let alone accommodate trade volume growth. But this time we will look at the global aggregate merchant fleet, including all sectors. It says, what do you get when you combine high fuel costs, impending emissions limitations starting in 2023, and record high scrap steel prices? Large ships sold for scrap at much younger ages than usual, despite an optimistic outlook on earnings. Last week's demo sales per advanced. Bunch of demolishing. 10, I will point out again that in addition to aggregate shipbuilding capacity being insufficient to keep up with the replacements for the global fleet, today's order book is heavily skewed towards container and gas carriers. Tanker and dry bulk deliveries are grossly insufficient. And that's exactly where I'm investing. Tanker and dry bulk. Castor, Maritime, and some of these other ones have tanker and dry bulk shippers. This is the fleet renewal potential. Dry bulk's over here with product tanker on the far left and crude tanker, chemical tanker all over here. LNG is way on the right, so there's a lot of fleet renewal potential over here, and container LPG. So I think over here is where you want to be. Another thing that most people don't talk about is the cost to renew these are going to absolutely skyrocket during a commodity boom. So it's going to be very interesting to see how dry bulk and tankers do during this next commodity cycle. I think they're going to go ballistic, but that's me. He goes, I suspect the largest and highest quality names like those there will do very well in the coming years as a buy and hold, barring the very real possibility of global recession. For those that take the time to understand the more idiosyncratic names in tankers and dry bulk can stomach the volatility and manage the associated risk, I suspect there could be an opportunity for truly exceptional returns like those seen in box ships in the last 2 years. I totally agree with that. And if you guys are interested, you can see my picks on the Finding Value website in the description link below. I've got all the picks and all the graphs and charts of the ones that I think will do well in tankers and dry bulk that are smaller cap companies that are putting in bottoms. Totally agree with that. Moving back up. Commodity prices near records despite massive reduction in Chinese imports. What happens when demand normalizes and strategic reserves used to manipulate prices lower are depleted? What if we get panic hoarding instead? I like that question. They're depleting their reserves, but what if we get panic hoarding? It all just flips on a dime. And the most important chart in global macro right now is this gap between the China imports and the commodity prices. Commodity prices are remaining resilient while they have shutdowns in China. This could reversing the price of commodities quite dramatically. NMM, that's Norivus Maritime, container ship revenues profit about to soar again. They're booking some really good, strong numbers here looking forward. Very strong numbers. The US and Brazil have enough unused or improperly used farmland plug the food supply gap being created in Ukraine. Even if we find the political will to feed the world instead of making ethanol and paying farmers not to produce, will we have the capacity to ship it? That's your dry bulk shipping squeeze. When everybody puts sanctions on Russia, we have to ship this stuff all over the world, changing the shipping routes to much longer routes with fewer ships. Fewer meaning we were talking about these over here. The fleet renewal potential over here is so low that it's not even replacing a one-to-one. So we're going to have less to ship with longer routes, completely changing the entire dynamic of dry bulk shipping. It says topics we need more articles about and more eyes on. Anything about bulkers and bulk ship capacity. Intermodal movement of food within net export countries. Policy restrictions that restrict transport. Hoarding stockpiles, slow streaming, etc. It says, John sounds the alarm and asks important questions. Will the U.S. make the food and do current policies support production and distribution of that food at a cost that the poorest around the world can afford? Look at the craziness of this shipping area here. I mean, this used to be, Russia just moving stuff all over the place here. Now we got to move it all over the place through the oceans. I don't know if we have enough ships. You're going to get a shipping squeeze hugely out of this. It says the world definitely has the shipping capacity, but just like fertilizer, it will come down to a matter of cost. The U.S. is much farther away from the usual importers of Ukrainian and Russian grain. If all this is a must-be replaced, shipping costs will rise significantly. Completely agree with that. So that's what I've got for today, guys. There we go. I'm back in. Again, I think the dry bulk shippers are really good. I think the tankers are good. And that's what I've been looking at on the Finding Value website. If you want to know the ones that I like, I did share one of them on the website or on the channel. That's Castor Maritime. There are other ones that look good. I've got a list. I've got all the charts on my Finding Value website. The Platinum Membership Edition gets you that information if you want to see it. I think that we are putting in bottoming patterns. We are starting to break some resistance levels on some of the big boys, and they're all looking exceptional. The background behind these, in terms of the fundamentals, look incredibly good for dry bulk shipping and tankers. That's where I've basically put all the attention is in those two areas. And why? Because they're most subject to the dry bulk index, which I think is going to go much higher over the next years. So we'll see what happens there. I'm positioning in those sectors. Obviously, if you're platinum member on the website knows which companies I'm loading up in. And you know what? Give me a thumbs up for the content. Subscribe to the channel. Subscribe to the website, Platinum Membership. That's the one that gets you all the goods in terms of the specific companies. The Silver Membership only gets you the financial education stuff. And we're still doing our weekly meetings. Our weekly meetings are I'm going to have to increase the capacity. We accidentally hit the capacity of 100 people. I'm sorry about that. If you wanted to join and you couldn't join, I will be ready next time with increased capacity for the next meeting. So I'll see you at the meeting there, everyone, and we'll see you next time. This is Finding Value.